Let's first touch on the S&P's most recent 4-day winning streak, which is now, of course, over. And so this was the sixth winning streak of at least 4 in 2023 so far. As we can see from the chart pretty clearly, is that 4 of the last 5 times, the S&P was higher 2 weeks later, colored in blue here. Happened in January, happened in April, happened in June and July. The only 4-day winning streak that did not produce ensuing upside over the next 2 weeks was, of course, the one from August, where that 4-day pop really was the only thing we saw that was shown signs of strength back then, and of course rolled over completely after that, another lower high, and then extended lower all the way into the beginning of October. Now, that's important for a few reasons. Number one, recency bias. We all know it just happened. We all know it failed, and it looks very similar to what just occurred over the last few days as well. So we need to see a better effort, clearly. Now, from a pattern perspective, that's very important because, again, we go back to the short-term breakout that we saw. Now, yesterday's action did produce that afternoon bid, which kept this breakout alive. And so this 44.50 target is still out there as well. Again, we know that's not too far away, but knowing that we haven't had a successful bullish pattern play out since the one that we got at the end of July, it's important to see something like this occur and occur relatively soon, in my opinion. Because if it doesn't, we go back to, again, what happened in August, where we saw a very similar looking pattern breakout occur, had a good extension, I would argue even better than this one so far, and then failed. And then again, the rally back attempt also failed. This was negated and things fell apart from there. Now, we all know it occurred during a month that typically has negative seasonality, but October does not. But regardless, we had to pay attention to the price action first, which again, this is why we need to see some kind of follow through relatively soon from pattern perspective. Another reason, of course, is because that smaller pattern looks like this on the daily chart. And so far, it's only been a few days above its breakout area, which is also the breakdown zone for this much bigger bearish pattern, right? We know that the biggest bearish patterns that have come to fruition over the last year or so have not played out, but still, this is going to be fresh in our minds because it's much bigger than the smaller one. And also, there's so many other indices, ETFs, and stocks that look like this as well, all trying to do the same thing, trying to turn this bounce into the beginning stages of a foundation to go from there. Now, of course, yesterday's reaction to the downside came because of a hotter than expected CPI number. And this is just a chart that shows all of the dates CPI got released, and the dates in red just show S&P was lower 2 weeks later, in blue when it was higher 2 weeks later. So far this year has been pretty even as can be so far through 9 months, up 2 weeks later, 5 times, down 4 times. And so other thing to consider is that this is the 4th time that the S&P came into that CPI release with an RSI in the midpoint here. Happened in August and September, and we know what happened there, rolled over completely. The other time was in May, where in the middle of May, again, market was kind of going sideways for a bit there, and it took a while, not too much of a reaction, but by the end of the month, that's when we got one of the most substantial breakouts of the year. We know that a very strong June into July then resulted. Now, that's important in May because if we go to the next chart, which has US dollar, 10-year yield in the S&P 500, that's when we saw, in May here, saw the breakout in June. At the same time, of course, the US dollar was rolling over. And this weakness in the dollar really propelled everything higher, even as rates were going higher, right? And so now, of course, we've had both rates and the dollar moving at a pretty relentless pace as the S&P has struggled. Now, there's any point at this time, I would say that the most important thing is to see some sort of lower high develop in both of these. But again, my opinion, more important is seeing the dollar first, just because of how strong this has been along the way. And so if we do see a lower high, that will be the beginning stages of a potential topping pattern for both. If we don't, guess what? This uptrend remains in play. This one will as well. And it'll be a good chance that the most recent breakout in the S&P will get negated again. So that's going to be important, obviously, going forward, especially as we get through earnings season over the next few weeks. That's it for today. Feel free to check out these other videos that we have and subscribe, and talk to you next time. Thank you.